Warren Buffett, one of the greatest investors of all time, is sitting on a record-breaking $324 billion in cash. But why? What does he know that we don't? At the same time, the S&P 500's PE ratio is at dangerously high levels, signaling that the market might be overvalued. Are we in a bubble? And could a market crash be coming? Stick around, because in this video, we'll dive deep into why Buffett is holding so much cash and why the stock market might be headed for a major correction. One of the biggest indicators that the stock market might be in a bubble is the price-to-earnings ratio, PE, of the S&P 500. Right now, the PE ratio is hovering at around 30, significantly higher than the historical average of 15 to 20. Let's put this into perspective. In 2000, just before the dot-com bubble burst, the PE ratio was also at historically high levels. And the same was true in 2008, just before the Great Recession hit. When the PE ratio is this high, it signals that investors are paying much more for each dollar of earnings, a sign that stocks might be overvalued. In simple terms, the market is expensive, and when it's expensive, it tends to correct. So, how does this relate to Buffett? For years, Buffett has made his fortune by buying undervalued stocks during market downturns. But right now, his company, Berkshire Hathaway, is sitting on over $160 billion in cash, the largest amount it's ever held. Why? Well, Buffett believes that the market is overpriced right now, and he's not finding many opportunities worth investing in. He's said it before. Be fearful when others are greedy, and greedy when others are fearful. Right now, there's a lot of greed in the market. Stocks are soaring, and everyone's piling in. But Buffett's playing it cautious, waiting for the right moment to strike. Remember, the last time Buffett held this much cash was back in 2008, just before he made his famous investments in companies like Goldman Sachs and General Electric, buying them at a fraction of their true value. So, what does this mean for you? Is the market truly on the brink of a crash? Well, if you're looking at the current PE ratio of the S&P 500 and comparing it to past market crashes, the signs are pretty clear. The market may be due for a correction, but here's the thing. Just because a correction is likely doesn't mean it's happening tomorrow. It could take months or even years for the bubble to burst.